Why struggle through a post-merger integration when you can glide through it? Why deal with the PMI integration challenges when you can overcome them even before they occur? Why move slow when you can move at pace? What are the world's leading PMI experts doing right now to achieve profit-accelerating integrations? This podcast will give you all the answers to these questions and many more. My name is Dudley Peacock, and welcome to the 100 Days and Beyond podcast. Welcome everyone to the latest episode of 100 Days and Beyond, the podcast for the unsung heroes of the merger and acquisition journey, especially around the integration side of post-acquisition work. Once entities have been acquired, there's generally a team of individuals that are dedicated to make sure that the synergy capture and the value creation comes to fruition that the corp dev or the initial M&A team have thought through and have planned for, but don't necessarily have all the answers going into it. So often the integration team gets thrown into the deep end. Sometimes they get the privilege of working with the M&A team pre-deal. And we're going to talk today to Ashley Hyche, who is a specialist in a bunch of things. So I'm going to just go through your CV briefly, Ashley, and then I'm going to introduce you to everyone. Basically, Ashley is accomplished in corporate development, finance, M&A, strategy professional with leadership experience and expertise in managing the M&A process, which is already a big thing, deal negotiation, analysis, valuations, which is a big topic, all the way through to due diligence, integration, execution, and value creation for companies, both organically and inorganically. And I'm going to touch on one or two of those things as we go through our podcast today. An innovative and energetic leader, and having had a few conversations with Ashley already, I can definitely see the energy coming across, and I think that's necessary attribute to be a successful integration professional. Financial acumen, persistence, strategic insight, interpersonal communication skills, all things that are attributes that are key for success. And then deep financial services experience with fintechs and banks. I mean, those are two really interesting areas. You list your top skills, Ashley, as corporate development and strategy, M&A due diligence, and financial planning analysis. And a lot of that stuff comes into play when we're dealing with, especially with integration work. Ashley, welcome to the show.
Thank you so much, Dudley. Great to be here, and glad we're able to figure out the time zone difference.
Yeah, we did. Ashley, thank you, and thank you for joining. I just want to sort of kickstart the process, and let's just have a chat about your entry into this space. Many of us don't necessarily sit at school dreaming one day of becoming M&A or integration experts and so on. Where did it all start? How did you get into the space, and tell us a bit about your experience around that?
Absolutely. I would say I probably, during my graduate school, which I went to Thunderbird, which is an international MBA program, the main campus in Arizona. But I took some capstone courses there that were more focused on finance and strategy, and looked to get into a kind of a financial management development program coming out of graduate school. I was able to do that with moving to Silicon Valley and working with Applied Materials at the time. And that was really my first foray into getting into corporate development and M&A. In that particular role, I really kind of cut my teeth on understanding the due diligence process, more so on the front end of identifying acquisition candidates, and then performing all of the associated financial diligence with performing equity investments or acquisitions. of companies. We did have some divestitures as well, but I was fortunate to be with a company on an internal team that was quite robust. And, I would say we very much operated kind of as though we were a middle market investment bank, so to speak. And with our amount of cash on the balance sheet and how acquisitive we were able to be during those years.
That's so you started relatively soon in your career. I want to touch on on a bit of the due diligence side of things, because due diligence seems to have a different, let's say, a different slant or a different intent at different stages of deals. If you're looking just at pre-deal, post-deal types of due diligence, maybe just to expand a bit on that, because I think being a financial person, you would go in, I would imagine, would be your natural space to work in would be finance and financial due diligence, as well as, I imagine, all the other aspects around strategy and so on. And then post deal, just give us a bit of a flavor of the difference between pre and post deal due diligence.
Absolutely. Yeah. And that, the experience I shared there, earlier in my career was, with me being more on the earlier side of deal making, the due diligence. Those roles were, a bit more focused on, financial diligence, where I was part of a team. I would have, colleagues that were responsible for the technical aspect, or the product aspect, the human capital, HR, communication aspect. So I was a piece of a larger team in those regards. I think later on in my career, where I've been able to have more leadership role is in that integration planning, where I have always seen successful integrations play out, where an integration expert or an integration executive is able to take part as part of that due diligence effort before the deal is consummated, so you can help to form the investment thesis. I think having a voice and an understanding for where the leadership sees value, opportunity, synergy creation is really critical, to have a seat at that due diligence table, so that when you come to day one, you're not starting at ground zero to develop the success measures for an integration. So that's something I've learned over the years, is being able to advocate for having a seat at that due diligence table, where the integration plan can begin to take shape, and creating a robust, well thought out, measured plan over the life of an integration.
Yeah, I mean that's a really good answer. I just, if we look at the planning, I mean, if you're thinking due diligence and we're thinking about sort of rolling out a plan, you get multiple work streams and so on that happen. But if we sort of zoom out a bit and we say, okay, let's look at the sectors that you've been involved in your career, and if you go through your career, because I mean, our starting question is, how did you get into this, and then how did that develop? Because fintech, as we know it today, has changed significantly in a year, 2 years, 5 years, 10 years. Banking and financial institutions have had to make significant shifts as well. Maybe just paints a bit of a picture of how you've seen that change from when you first entered and where it is today.
Yeah. Yeah, I have had, more, some of my more recent experience with fintechs, but to your point, I also have had, quite a bit of integration experience at much larger institutions and banks. A lot of the principles at play regardless of the size of the company, are quite similar. I think, whether it's a bank or a fintech, I oftentimes, and I have put into place the same type, methods, with a post-merger integration, playbook of sorts, where, you do set up, a steering committee, an integration management office with all the, work streams below that. You set up the proper meeting cadence. So I haven't, really varied too much from that. I will say, in some of my experience with smaller companies, some .com, some fintech integrations, I will see sometimes there, it does take a bit more to be deliberate about engaging and getting involved on the due diligence side of an integration before the deal is consummated. I think there is sometimes market dynamics in mergers and acquisitions in general can oftentimes dictate when an opportunity is worth going for. And sometimes leadership, executive management has to take action quickly, just based on, sometimes it's a bidding exercise, there's competition in the market. So for an integration expert or someone tasked with performing integration activities, sometimes it's a luxury to have time to plan out an integration in some cases. Now, in some larger industrial companies where I've done integrations, there was one in particular, it was in the defense industry. I had this particular acquisition would have doubled the size of the business unit I was in. The business unit was about $1 billion business unit. The acquisition target would have been approximately 800 million. And there was not that much competition in this space. So we actually took 6 months of time to fully plan out the integration. And we knew everything from communications well before day one. We knew the facility rationalization plan. We knew the synergy efficiencies we were going to look to capture. So again, that's an example of more of an industrial, whereas fintechs I have seen they're typically don't have that type of lead time to plan integration activities. And I think a sound process is one that can help a management team and leader be successful.
Yeah, I mean that's interesting. I mean, I want to ask a little bit about the human dynamics and then about the valuation, some of the valuation principles pre and post, to see that you're not overpaying for a business. But let's just look at that sort of that planning concepts of the human dynamics side. If you have enough time, as your let's call it the more industrial example, how do you deal with the dynamic around, what the rationalization plan is going to be? How do you keep the teams motivated, knowing that there's going to be some significant changes coming? You got enough time to plan, and many people will probably realize that they've got a shorter and shorter runway in terms of their jobs, careers, and so on. Do you think there's a benefit in that? Does it give these people that might not be there after the rationalization has been completed, that they now have a bit of extra time and space to go and look for an alternative, and it helps them cope with the change? I mean, just tell me a little bit about the human dynamic. I mean, if you can look into people's souls.
That's a really good question. Again, I think it's somewhat unique to have that much time to plan for integration and get pretty heavily involved with, this example that I was using, the industrial, in the defense and aerospace business. I would say that the human dynamic, one way that we help to manage that internally, well, first of all, we were the acquirer. We were going to be buying, the other entity. So we certainly kept any of the planning internal only. So there was no external interaction with the target. I would say we were selective in who we chose to be our partners across the different functions. Some of the key functions, as you might expect, were finance, marketing, sales, and HR or human capital. HR was probably the partner where there was a bit of concern around the change management that was going to be coming. I think for them to understand, what was going to be done, how the culture might change, but giving them a voice as part of the planning exercise, I think gave them some level of confidence that, again, because we were the acquirer, I do not believe that there was a sense of fear that their jobs, their functions were going to be significantly impacted. And we certainly did not permeate very low into the organization as part of our integration planning. We would work with, very senior level executives. So we were able to keep the knowledge, there was, it was kind of understood that this was confidential in nature, and they were part of a team to assess and perform the integration diligence for this particular target.
And then the polar opposite would be a rapid fintech-based acquisition where the deal gets announced and then you arrive as day one. But I think you've managed during your career, if I'm not mistaken, you've been more on the acquisition team, driving all the way from the beginning of an acquisition process, more so than just being part of an integration team. Just give me a bit of a dynamic around that, as in a more rapidly moving integration, where now you're dealing with people that yesterday had no idea and today it's a surprise. And as the panic sets in, it's the deer in the headlights almost syndrome, if you like. So just give me a bit of your experience around that.
Yeah, I do have an experience where I started with an earlier stage company, and it was really only a few weeks before the company announced an acquisition. So I was literally had been an employee for a few weeks before there was an acquisition. So, but I also was responsible for leading the integration effort. So that was a case where, again, it was in the fintech space, and it was a software as a service company, taking the company international for the first time. This was an interesting acquisition in that it was not going to result in, it was a much smaller company that we were acquiring. It was not going to impact the personnel. There was not going to be any true synergy capture from employee rationalization. So that was, in one sense, that was good, that there was not going to be that type of deer in the headlights, as you put it, that type of impact. This was, but it doesn't mean that there certainly needed to be adequate communications. Really, there was some pre-acquisition communication, making sure that we had the right foundation building for future communications, and that we were clear of who the audience was, whether it was senior management, the employees of the acquired entity. We were really conscious to make sure that we had regular touch points with the employee base, if not weekly, certainly bi-weekly, with topics that we brought to the table, that we were able to get those topics through the management team that we acquired, and things that you would hear at the water cooler that certainly would normally not bubble up into a broader team meeting. But we tried to do just that, to give the employee base the comfort of what was going to be happening and when it was going to be happening. To the extent we could convey, what was going to be changing, we were transparent in those activities. And we felt that gave those team members comfort around what their roles and responsibilities were going to be, what some of the non-negotiable items were going to be in the new structure. And and then being able to convey the business objectives. So they were clear how their products were going to be assimilated into the broader organization going forward.
Because there's also different levels of integration. I mean, sometimes you swallow the entire entity, you swallow them up entirely. And other times it's more, you leave them alone to a greater extent and you only integrate smaller elements of it. I want to go into you being a financial guy. I want to go into some of the valuations pre and post deal. So it's when you're doing valuations of an entity, I mean, one of the big drivers is not to overpay for a business and to pay at least fair value for the exiting shareholders or wherever you're buying from. And at the same time, trying to pay as little as possible, but not overpaying, but having a decent enough balance, but having the mindset of whatever I'm paying for this business, at the end of it, I need to end up with more at the end of the integration process or at the end of, by the time I need to exit. So have you seen big differences between pre-deal and post-deal valuations where it's gone wrong and where it's gone right? And maybe just sort of, there's a lot of assumptions that get made pre-deal.
Right. Yeah, no, that's a great question. I think, any acquirer, I believe, would say that they would prefer any acquisition to be accretive to their bottom line. If it's a public company, you would prefer the earnings per share to rise, that you see an accretion event. That doesn't always turn out to be the case. I think smaller companies, private companies, sometimes have a more difficult time to prove that out. There are also, this puts a lot of the importance of, in my mind, why integrations need to be clear, integration managers of setting the strategic factors, the strategic drivers of why the acquisition was pursued, creating 100-day goals and beyond to be able to meet the integration objectives. Some of those will be sales oriented. Some might be, reducing, receivables by 10% in 100 days. But being clear to understand what the execution risk areas are, because the more diligence you have to identify those success criteria and the key performance indicators early on, I think gives any management team the ability to look back and quantify in 1 month, 2 month, quarterly increments. And there are a lot of professional firms that can come in and assist on this as well, but put in the metrics to be able to prove over time that the acquisition was a success, and whatever those metrics are that you can point to them specifically, measure them, and then if you need to adjust course, then that may also be needed. So I think that is helpful.
Yeah, because there are often a bunch of levers that you could shift and move in terms of your key performance indicators. If you reduce the collection days, for instance, on your debtors, on your accounts receivable, and you manage to shift some creditor days or accounts payable, just shifting a few levers, you could potentially, without much difficulty, add a bit of value. However, sometimes there are unintended consequences. So you moving these levers, having a theoretical or let's call it a theoretically logical outcome, and then something goes wrong because now you've upset the customers or you've done something from a creditor or an accounts payable arrangement, and you've now got a knock-on effect. Now all of a sudden the service delivery maybe is impacted. Your finance has been improved, but the delivery, let's say, from the suppliers of it, because now there's different owners or whatever it is. Just tell us a little bit, if you've got any experience around that, some unintended consequences, pulling those levers and then something out of the ordinary happens.
Yeah, I think, sometimes there's one, integration that comes to mind. It was one where, the market dynamics presented a situation where the leadership team had to move probably a bit quicker than as an integration, as the responsible party for the integration, would have liked to have some additional time to perform some of the diligence activities, to set up a clean team or a clean room where you have the appropriate leaders help to assess the target operating model. And the target operating model, again, ideally is something that can be debated among leadership to know how it is you want to run the business. Sometimes there are significant technology implications to the products that are going to be part of the go forward plan. Yeah, one integration in particular is one where, it was an international entity that we acquired, a U.S. company. We, being the U.S. company, acquired a European entity, and the top product for both companies happened to be a product that the acquired entity had. What we did not have the benefit of time to fully understand was kind of the go-to-market strategy for, come day 1, day 30, day 100, exactly being able to communicate with conviction on how the two products were going to play together on a global scale. That's one that we certainly, and as an integration manager, there's a need to get the details and define that target operating model. And this is one where, we had to do, kind of an inside out analysis of the acquired entities, analytics, leveraging, the existing customer and product data that supplemented, the usage trends, what drove the volume, what drove the adoption rates of that product, understanding what functionality was being added, what functionality was being dropped, what customer segments, what profiles emerged from that type of analysis. Again, that's something that, sometimes market dynamics dictate that, but that's something that, in retrospect, I think would have liked to have had more time on the front end to be part of that due diligence effort.
Because time is often something that's superficially selected, as in, we need to get this done by X date, as opposed to, this is what's realistically important to time that's required in order to make sure this thing comes to fruition. So I want to touch on that, because I think it goes into what I mentioned earlier, is out of your profile, and you talk about value creation for companies both organically and inorganically. Maybe you want to expand a little bit about that. What do you mean by those two terms?
Sure. So on the organic side, I'll use an example at a large financial services company, a large bank that I have been with recently. And for anyone looking at my profile, they can probably guess who that is. But organic growth, what I mean by that is to be able to identify strategic growth areas for the existing business, with your existing leadership, your existing sales staff, technology, operations platform. The example that I would share is a recent initiative that I led to create a new internal line of business that was partnering across, it happened to be partnering across the commercial banking side of our bank and the corporate and investment banking side. And we really needed both parties to come together for, it was really an internal joint venture, for lack of a better term, where our corporate investment banking team had underwriting capability. They had the risk profile for the particular product that the commercial bank had never had. And the commercial bank, not that we may not have been able to get there at some point in time, but speed to market was important in this internal organic initiative. And we were able to get the senior most leadership to concur that in order to accelerate the launch, the soft launch of this particular growth initiative, again, this was organic. We did not have to bring in external hires into the organization. It was truly working within our existing teams to craft a new business plan, a new strategy, and then being able to execute on it. And that's what I mean by organic, as opposed to inorganic. Almost by definition, you need to, the type of deal or acquisition or investment that a company is looking at, understanding what your desire is. Are you going for scale? Are you going for scope? Sometimes the scope might enable an acquirer in an inorganic activity to enter a new market, a new product line or channel, by targeting a related but a distinct business to acquire. So those are some examples there, Dudley.
No, great example. So, and I'm quite liking the difference or the differentiating between even an internal project being something that you consider it could be organic, as opposed to, one would think organic is take your existing sales products, etc., territories, and just sell more or increase prices or just do something, that you can just pull a few levers. Where inorganic starts to become a little bit more difficult, because now it's started to put pieces of a puzzle together and add in additional complexities that you didn't have in the past, and you got a new entity to make sure that it can happen. So I'm quite liking that. I want to just go back to valuation, and you being a finance guy. I want to maybe just sort of touch on sort of valuation principles. Do you have a let's call it a favorite set of tools? Have you put together, in your career, put together your go-to, let's call it your go-to methodologies, your go-to techniques that just seem to work for you?
And this is specific to valuation, is that right?
Valuations, and then broaden out maybe in terms of your integrations and how you actually make those things come to fruition.
Got it. I think, in full transparency, I think in the more recent part of my career, I would kind of call it the last 10 years, I have not been doing as much of that financial diligence valuation work. But, I would say, just about 5-7 years ago, I was working for a firm where I happened to be familiar with some tools. Capital IQ is a pretty well-known software platform. I had used that in investment banking. There are many platforms out there, but I was able to quickly drill into a specific segment by looking up NAICS codes and to identify a segment that the company I was with at the time, to quickly go in and look at what were precedent transaction volumes as well as valuations, more based on a multiple of EBITDA, a multiple of revenue. The business I was with was a consulting business, and those were really good metrics. Another resource is GF Data Resources, which they are still around. and GF Data Resources takes, they have private equity groups primarily providing deal transaction identifiers, but they do not convey the specific company names. It's all by NAICS code, the industry code classification. But that is also a very good tool that I have seen. I've been able to predict very close what some external acquirers did acquire that company for, based on a multiple of EBITDA for this particular consulting business. And for integrations, there just over the years, I've, certainly picked up, you can probably go find really good articles in Harvard Business Review. GE Capital is one company, or GE in particular, was probably on the front end of really defining the need for integration, not being considered a discrete phase of a deal. Integration is not something that begins when the docs are signed. Rather it's a process beginning with due diligence. And I think GE, and there is a lot of literature on their success of being able to stand up, manage, and execute integrations. Those are some of the materials that I've used over the years to help formulate my approaches. Also, with being in consulting as well, consulting firms often are privy to some of the more current methodologies and approaches, and I've been able to integrate those, no pun intended, into my repertoire.
So with the a consulting background, and also with your varying experience and so on, different approaches, different people, different approaches, and some people see consultants as sort of flying in and flying out, as opposed to when you're working with integrations and so on, you often become part of some of the DNA, at least for a period of time, because most integrations that are not that quick, and your relationship making ability is tapped in, I think, a lot higher, or required a lot more in the people side of things, as opposed to consulting, which is more about applying methodologies and getting a result for a specific task. Give me your view on that. Am I going down the right route in terms of that sort of analysis?
No, that's an excellent point. It's one that, because I've been fortunate to have had the consulting experience, but also a number of experiences sitting on the corporate side of the table, where I'm either leading the integration strategy and approach for the company, or earlier in my career I was part of a team leading the integration. That is a distinct difference. Being internal, well, first of all, you own it. You not only may have to take what a consulting firm might bring, to the extent that internally you have outsourced some of the integration capability. Let's just hypothetically say that's the case. They may be bringing in some of the credentials, some of the methodologies, approaches to be deployed, but on the internal side, ultimately that person, that team, is going to own the outcome, and it is incumbent upon that internal executive or team to establish and create adequate relationships, healthy relationships, I would say, across the organization and across the acquired entity. One of the things that I've seen to be successful is making sure that decision making and how decisions will happen and occur, and the frequency of decision making sure that that's clear, of how decisions are brought up for discussion, how they are discussed, and then how quickly they can be decided. Because again, that presents execution risk. I think the ability to have, one-on-ones, but have work stream participation from both the acquirer and the acquired entity on, have representatives from both sides, helps to increase communications, increases confidence and collaboration across the team. So that's one distinction that I completely agree with by being internal as opposed to, just an external consultant.
So, sorry. So, if I had to ask you, this is not a big community. There's integration and M&A has got, I think you mentioned it's not necessarily just seen as a discrete process for some entities, but some entities put a lot more emphasis at the M&A, sort of the deal making portion of it, and less so in the integration side. I think over the years, and having had a decent conversation with you, I think you're of, and maybe you just have to confirm this, is that integration and M&A and that whole process is almost a single process that needs to be taken into account, where you are leading from the beginning, from even the intention of doing an acquisition or running an acquisition process, thinking about the strategy, because part of your profile talks about strategic and creating a strategic plans and executing on them all the way through to seeing right down to each one of the work streams completed. So it's a very long journey that this podcast is specifically around the integration portion of it. If I had to ask, you've got the privilege of having seen the entire journey, and if I had to bring that in, and I say, Ashley, can you, as a practitioner of all these different aspects, can you say what differentiates, what makes an individual good at what this is, especially integration? What are the key attributes of a good integration practitioner, as opposed to necessarily not just a deal maker or not just a finance person or a sales or marketing or any of the other operations types of work? What do you think? I mean, what's your view on that, having experienced this broad category?
Yeah, I think, and whoever might be tasked, for any of your listeners, for integration responsibilities, whether it's a well-formed function within an organization or one that's just being put together and it's just in its nascent stages of being created, I think finding executives, leaders that have built confidence and trust, and someone that can really become a trusted advisor internally, across constituents, across stakeholders. I feel it needs to be somebody that really understands change management and knowing how to work across functions. It doesn't have to be a good integration leader. I've seen them be really good coming out of the HR human capital organization. I've seen really strong leaders coming, more from a finance perspective or a product perspective. I think a general sense of, or strong business acumen across the key functions of an organization is helpful. But again, serving as that change champion, understanding there is going to be change impact, identifying, through, and as an example, like a change impact assessment across all the different functions and stakeholders, and clarifying, where are their risks, where are there, quick wins, some items in integrations, someone that has the ability to categorize, quick wins from those that are going to have a longer time frame against them, and being deliberate in planning across the functions and setting targets. Those are skills that I think a integration executive or leader being brought into such a function, really need to have that top of mind to be successful.
That's a decent list, and it's quite a broad set of requirements. I want to put you on the spot a little, and maybe just sort of hone in or zone in onto you personally, and actually, what would you say differentiates you as a practitioner as opposed to other people out there that also have a similar set of skills? Have you worked out what's your magic? What do you bring? What's your value proposition to an organization?
I think one of the assets I think I bring is just my breadth of experience at this point. Starting earlier in my career, more on the financial diligence side of the equation. So understanding the deal economics has been, helpful for me being able to interact, in the latter stages of my career at this point, understanding the impacts that, bringing two organizations together has on all functions and all team members. I think, building again the confidence and trust with your stakeholders, knowing that they're going to be heard, that their pain points are going to be addressed in some form or fashion. Doesn't mean they're always going to have to be solved and by day 30 or day 60. But I think my ability to be transparent and honest with partners is one that comes just through experience and over time building that trust, and following an approach and staying true to the approach, the plan is one that I also feel like helps to support my ability to be successful and live through the integration continuum, because it is it doesn't end at 100 days. I've seen them last for years in some cases. So I think just knowing that I'm somebody fully vested in seeing it through to the end comes with great value.
No, that's fantastic. That's wonderful. Actually, just then sort of in terms of the pressures of this type of this is not something that's like a walk in the park, as we call it, or a day out on the beach. This is proper hard work, and sometimes travel, the hours. I know with the pandemic things have changed slightly, but now we're staring at screens for longer hours. We are, life's changed, but the hours are still there. The pressure to bring results is still very much present. And how do you balance your work life, keep yourself at least in good shape or whatever that is, or good health, keep family ties and relationships in place, and just keep sort of just your sanity and your mental
Sure.
health? Give us your secret.
I don't know that it's a secret, but I have, my wife and I have two kids that are teenagers. So I think the lively life of a teenager probably helps to keep me active and in current on items in the world that as busy as sometimes you do get with M&A and integration. I find a lot of comfort in spending time with my wife and my kids. We're quite active, I would say, outdoors and in sports, and I think I maintain a lot of my sanity and hopefully a sense of calm by making sure I do my part to take care of my health, and oftentimes I see that through some sort of aerobic activity or working out of some sort. I like to say I can do it most days of the week. That doesn't always happen, but it really helps me to keep my mind clear and refreshed for for the work and the task at hand. And I would say for those that have to travel with some of these activities, I think, you may be in a hotel quite often. I think, trying to incorporate maintaining some of that rhythm of, if it's going out for a walk or just getting some free time to take care of yourself, I think really helps in the long run.
Yeah, that's wonderful. So, I mean, there's definitely an element of you can definitely be more productive by actually stepping away sometimes and just taking that breather, just clearing the head and making sure that you get the blood flowing. And then family is very, very important. And especially, I mean, these days, I think for me, I see a bigger shift towards family becoming more important. I think there was a time when it was less maybe important than what it is today. And I see closer ties and bonds. Maybe we're getting close to the end of the episode, and I want to maybe just sort of ask you, Ashley, are there any sort of golden nuggets, some takeaways that you could share, some words of wisdom before we close off?
I would say we've touched on it some, but I think that the communication strategy, this is just one area where I have seen, some integration efforts fall short. And I've always been keen to have a communications partner. Depending on the size of the company, it can be within a marketing organization, or it may be a dedicated communications function. But the imperative here is that the communication strategy is reliable, is one that you can get the information out early and often. And they're all types of communication that are so critical to mergers and acquisitions and integrations. It's that communication pre-acquisition that might simply be internal communications. And then there's, foundation building with your respective audiences. And then external communications, making sure that you have a rapid integration timeline, and being able to assimilate all of the communications together, again, depending on the size, complexity of an integration. Without a strong communications partner, that's just one morsel of information that I have seen work out well, and then sometimes not so well. So I'm someone keen to try to find that communications partner.
Nice. That's a great way to end the episode. And Ashley, thank you very much. Ashley Hyche, I want to thank you for being open and sharing your experiences and so on today. And I'm hoping that there are a few people out there that can feel inspired, but not only that, just feel comforted that there are experts out there, and there are people out there that have got the broad and deep experience that you have. If people want to get hold of you, Ashley, how would they do that? What's the best place to get in touch?
Probably through LinkedIn. And someone could send me an invite and reference this episode if you would like, or Dudley's platform. LinkedIn's probably the best way, and then you can send me a LinkedIn message, and once we're connected, then my contact details would be there on LinkedIn.
Thank you very much. Thanks for that, and we'll make sure that those your details are on the episode explainer or the description. And that is the end of the show. Thank you so much for joining us today, Ashley.
Great. Thank you, Dudley.
Thank you. And to the audience, just thank you very much for joining us for another episode of 100 Days and Beyond. For me, it's the unsung heroes, and Ashley is one of them. The guys that make stuff happen behind the scenes, yet are humble and open enough to give back to the community and to provide that sense of knowing that there is life after and life before and life during an integration and even a whole M&A process. That's the end of today's episode. Thank you very much. Dial in for the next one, and and all the best for your endeavors in M&A and especially on the integration side. Thank you, everyone, and goodbye. Hi, everybody. This is Dudley again. And if you need help with a future or existing post-merger integration, I want to invite you to arrange a free, no obligation meeting with us. During the meeting, we'll find out exactly what you need, what your challenges are, and we'll explain how our unique PMI slipstream method can help you. Simply call us or visit mergerintegration.co.uk. That's mergerintegration.co.uk, or come to our website, skillfulpursuit.com.